We keep hearing about the Trump tariffs and its impact on the economy. The Dow Jones and other stock market indexes are tanking. They may not be right now, but they have over the last couple of days. And I think some of us are wondering, maybe you're new to the business and wondering, well, how are the tariffs going to either directly or indirectly impact the insurance sales business? And what I'm going to try to answer here, just kind of as a starting topic, is what my thoughts are as some dude who works out of his house that's been successful in the insurance business, at least in the life insurance category of things. I'm going to give you my opinion. Again, it's opinion, not a professional economist. I'm a salesperson that runs a business. I'm going to give you my opinion, how I think more on an indirect basis, how we're going to be impacted as insurance agents and as insurance agency owners, with the hope of giving you some perspective, again, from somebody who has been in the business, who's been through several contractions in the economy and has experienced the outcomes of those. So take it for what it's worth. We're going to go over the different most common niches that are out there, and it's, I think, the impact itself on what we'll see the tariffs getting enacted will do. And then I'm going to go over the business of insurance sales from a recruiting standpoint and why I actually think it's great for business. So first of all, how will property and casualty be affected? If there are tariffs that increase the price of goods that come into the country, such as the different parts that are associated with car insurance or the car itself, as well as home owners you could throw into there too, the parts of building out a home. If prices go up and replacement costs increase, then it's likely you can expect some sort of increase on the actual cost of insuring those homes or the actual vehicles themselves. So it's likely, I think it's not a stretch to expect premium rates to increase to reflect the increased cost or inflation pressure on the cost of replacement itself. Same thing with final expense. It's arguable if, and I think a lot of these funeral caskets themselves are not necessarily all USA based. If they're sourcing components outside of the country to build these, or entirely having them manufactured outside of the United States, you are likely going to see, depending on where, of course, the units themselves are built, an increase in the cost to get buried on top of the increases that we've seen just over the past 15, 20 years. And which means to cover effectively those costs, assuming all else is equal, which that's another kind of unintended consequence you may see. People may change their buying behavior, not necessarily accommodate the prices, but change their buying behavior. We'll get into that in a second. You might see a higher cost point to die, which I don't arguably think so, and I'll explain why, contribute to a higher premium, again, all else equal. So now here's why I'm actually not too worried. I want to remind you out there, I don't care what your political affiliation is. This isn't like a Republicans versus Democrats assessment. I have no care to discuss any of the politics behind this. This is strictly a business type of program we're doing here. And a reason I say that is because I want you to extract yourself from the news cycle. There is a lot of always in these circumstances, some level of fear mongering. There's some level of scare tactics going on. There's a lot of clickbait to get you entranced in the news cycle. You are a product that people sell news to you to absorb and to consume. Please remember that regardless of what is said, all of this to some extent is designed to make you afraid, gaslight you, etc. But I want you to take a step back from this and to think about the impact and how it may affect, in a more sober light, the actual business itself. This is what my thinking is along these lines. Regardless of if there is a tariff and if it's a negative impact on the economy, my question to you is this: how does this change the consumer's appetite for all things insurance? Are people going to buy less insurance? I don't think so. I think what we'll possibly see happen is a realignment of the kind of insurance that they buy or the amount of insurance that they buy. And that may be impacted more or less depending on the demographics that you are selling to. So I don't see people dropping car insurance and riding around without insured vehicles. In a lot of states, it's required. So I don't see a lot of impact economically to that particular market. We may see people more aggressively shop the rates and to get a better deal or to cut out certain aspects of the insurance. And that might happen, but the volume of sales may not necessarily change. It may continue to go up, as I think it will, with the population increasing and more people driving. It's the same thing on the life insurance side. I don't personally see, when it comes to final expense, which is the niche that, of course, I focus on, really things changing. And I'll give you a couple of reasons why, plus some historical anecdotes. So our clients are on a fixed income. They receive a fixed check from Social Security or disability every month on the same day or earlier for the rest of their lives until they kick the bucket. And not once has Social Security ever missed a payment or reduced benefits. And I don't think that's going to happen, even with all the Doge concerns about cutting back the government, because I think I read there's like 61 or 69 million Social Security benefits right now. Imagine if we cut their income by a fourth. Do you think that some of them would trade allegiance with the other side of the aisle to elect in people that would restore and maybe increase their benefits? I think so. Historically, Social Security has been the third rail. So I don't see a lot really getting impacted from a negative standpoint on the benefits of seniors. Likewise, I don't see the need for what we're selling changing. And what I would imagine, again, this is just anecdotal, is we would see a reshifting of how one's money would be spent if for some reason burial expenses got progressively higher in a short period of time. I think some consumer sentiment would shift towards maybe putting that money towards a cremation instead, to getting the end result being, I'm dead, what are you going to do with my body? Maybe shifting from a burial to a cremation, or maybe downsizing from, an elaborate funeral to a more simple funeral. So I think people will shift how they spend their money in regards to the outcome of whatever happens with these tariffs. But notice what I don't think is going to happen is the total termination of the business model. I don't think insurance in general is going anywhere. And I think certain niches like final expense are still socioeconomically posed to grow. And I'll give you again some anecdotal evidence to this. And this is history. History doesn't necessarily prove what's going to happen in the future. But I got started in the midst of the Great Recession back in 2011. Final expense was going strong then. It was going strong into the Trump election, throughout the Obama administration. It probably arguably picked up into an interest into the Trump administration. Then when COVID hit, and we saw in some sense, the economy constrain or contract, actually final expense went up even better. In times of uncertainty and certainly fear of death, people buy more life insurance. It's just what you think about under duress and stress. And final expense has been going strong. Now, I think there's been some sort of contraction. Again, this is just anecdotal. A lot of carriers have left the market, but I think that because there was a huge run-up prior to the deflation or contraction out of the market, carriers got into this business, didn't know what they were doing, did not understand the market, and then a lot of them have exited because they rode the higher level of interest from about, I would say, 16 or 17 to about 22 or 23. But other than that, the underlying demographics of final expense are not going to change. You can look at the level of people aging into the age where they concern themselves with final expense preparation. That's increasing 10 to 11,000 a day. People are going to end up with less money, meaning less financial resources to pay cash or to pay off a burial expense early. So therein lies the need for final expense coverage. And one of the cool things that we can do, if you're new to this business, then you don't understand this, you're not fixed. You don't have fixed costs in final expense as a salesperson. You can sell a plan that is less money to make it more affordable to the client. You're not fixed like with some products out there where the cost to build or to make the good, there's a floor to it. If you sell it under that amount, you're losing money per sale. On the final expense policy side, that to create a policy is effectively, there's obviously underwriting costs, but beyond that, there's very little. And you as the agent don't necessarily have to carry the cost. Of course, you have to pay leads if you do that, but if you get them for free, you don't. And so you can just accommodate by lowering the premium. You can just sell a smaller policy if, let's say, somebody's so constrained with their budget. So the reason I say all this is because there's a lot of fear out there. A lot of people are upset and worried about different industries. And there certainly is absolutely the cause for being concerned. I don't see it being the same for the insurance business at large, and definitely not the case for final expense. This is as if you're a new agent. This is why it's critical to pick niches that are recession resistant. Okay. And speaking of which, this is why I am, like I said, very bullish on the final expense market, because it has grown regardless of what has happened in the past. I won't say it's recession proof, but it is resistant to some of the bad stuff that's happened, economically speaking, where other industries have got creamed. Final expense has just gone on its merry way. Our clients are still paid money. That I don't think I'm willing to, you never know, but I'm willing to gamble on that. The idea that our seniors get their Social Security taken away and thus their ability to pay, it would just mean political ruin for whatever party does that, like guaranteed political failure for the foreseeable future. Nobody's willing to take that risk. So I don't see us, losing, my clients losing the ability to pay their premiums. Probably will be even better because the population of seniors is growing from, I think it's like 11% to 17% of the population upward to 2040. And then again, the underlying trend of people getting older means that more and more people are going to, as a percentage, get interested in this product. How they buy it and to what degree, of course, will be affected by these things kind of indirectly. But ultimately, I just think this business is a safe play. And I can't stress enough, this is what I found out when I first got in 2011. I had a personal training gym, which is entirely discretionary. Nobody needs to have a personal trainer. You can work out at home. You can buy lesser expensive options. And that's actually what people did. And that's kind of my motivation and thinking here. I don't think people didn't stop working out. They just didn't spend $500 a month on group personal training. They just spent $150 a month at a very large group, gym, and they just saved money and didn't spend it. And I think that's what you'll find here is just a reallocation of money spent in a different way. And final expense proved to be very consistent in each of these upheavals economically. And my hope is and thinking is that that's probably going to be the case here. But not all business models may be like this. You may see some pressure on, say, the term insurance market or the younger market where people may lose their jobs. So be very thoughtful about what you choose to sell, from not just from its capability and opportunity today, but what it's going to look like the next 15 or 20 years. You really want to look at this business as a career-based model, meaning what's the overarching direction that this business is going, not just from quarter to quarter, or even administration, but what are the socioeconomic factors that underlie it? Because that's going to, I hope, show you which business models are safer. There's no perfect business model in the insurance business, but some products I think offer a level or a degree of higher level of safety than others. So keep that in mind. Okay.